So before, obviously, if you look at the pyramid there, it was a lot of people were doing very basic, things, very manual, etc., like that. So, and there was very small set of people right at the top doing the deep analytical thinking, etc., like that. Flipping that over, where we are now, we've obviously turned that pyramid upside down, and now we've got a lot more people actually going, analyzing the data that we've got. So that's where you want to get to, that's hopefully, the basic strategy of what companies need to be doing. So from that point of view is, rather than people having to do these manual processes, how can you automate that internally? Go and take in Power BI or Power Automate, or some of the partners you're going to see later this afternoon. It's how can you use their tools to go and help you go and do that. There's a deck at the end, and I'll give you the link. I think Rishi will share the slides afterwards with everyone. There's some links to sort of some of the use cases internally. It's available if you find it online. I can put some other links to some people talking about some deeper cube building and things like that we did inside Microsoft as well. So if you ever look out for it, Chris Hamill, who used to work in finance, and Mark Regera are now part of the Power BI CAT, which is the customer advisory team. They're from our finance teams. They have now moved into Power BI, and they are actually help deliver customer, side of it. So potentially some of you theoretically could be our future, people who go and work inside Power BI at Microsoft, and that's, people who are actually using it on a day-to-day basis.
There is a very famous statement, I think it was by a statistician called George Box. You can Google me and tell me I'm wrong in a minute, but it says that all models are wrong, but some are useful. Now, the models that I've got, I promise you, are definitely wrong and obviously wrong. They're quite simple teaching models, but I hope they're going to be useful in kind of suggesting how we might use Excel to build or at least to prototype a model. And I ask the question, does Excel, Excel spreadsheet, every Power BI report, is it a what-if model? Probably not. I mean, most of the Power BI reports I write use historic data, and they gain some insight into that historic data, which we might use for our decisions going forward. But I'd say a what-if model is essentially has got future dates in it. And when that works, we're kind of predicting our planning for the future. So, and we're trying to estimate, forecast, an important result. In the models I'm going to be doing, the result is going to be we're looking at an income statement is going to be the net profit. We're going to, as well as that result, getting the most likely result, we might want to say what can possibly go wrong, how much is our upside, so what's the best case, and so we'll be looking at scenario analysis, sensitivity to do that, and then Monte Carlo. And especially with Monte Carlo, we want to say, okay, this is our likely profit, but we want to know the probability of something going wrong. For example, in what it would be in a financial case would be what's the probability of us making a loss? I was talking to some people in hospitals, and their kind of break case was when they'd have no capacity, no hospital. So it could be an operational thing as well. And we're going to talk about when we know some of our inputs we don't exactly know what the values will be. They're outside our control. So let's go. So this is one of the really basic examples we're doing. I told you they were simple. We're going to take a company income statement. It's the smallest income statement you've ever seen. This company makes $1 million. We've got some costs of goods there that are subject to the inflation rates, and we know that's out of control. We've got, the company's got a loan from the bank, and the bank is putting up the interest rates, so that changed the interest. And of course, corporation tax changes from day to day, changed yesterday, who knows what it's going to be tomorrow. So those are three things that are completely out of our control. Those are what I'd call the variable inputs to it.
Okay, so here's the report, and here's the report that you can follow through online. I'm going to cover sort of 10 key observations, which are challenges that you're going to find when you work with Power BI and financial reporting. So The first thing that you're going to find is actually doing subtotals is really difficult within Power BI. There isn't a standard way of doing it or doing bespoke subtotals that you need. So you need to model your data very carefully and to enable you to do this, right? So we've got a specific subtotal here called total gross revenue. We've got lots of subtotals like net invoice revenue, net revenue, etc. And this is all based off of a real example, did large global company. Okay, so this isn't like just theory, this is what you can actually do. The second thing is notice that we've got different types of calculation in here. So as well as subtotals, we've got percentages. So again, those of you who are familiar with Power BI will recognize that this is difficult to do. Probably the most common metric that we get asked, which is a kind of a bespoke calculation which you need to bring in, is something called EPS, so earnings per share. So this is something that most large corporations will ask you to bake into any P&L statement of comprehensive income solution. And actually, you'll probably have multiple EPS calculations in there as well. So you'll have things like core EPS and stuff like that. As you recognize, that's not just a financial metric. So you also need to understand the number of shares in there as well. So there's other data being brought in. Quite often, you'll also have call-out numbers in there as well. So below your line of profit after tax, earnings per share, you'll have specific numbers that the business wants to call out. I'm just highlighting one here, full-time equivalent, FTE is quite a common FTE percentage. And as you'll know, FTE doesn't appear anywhere else on the P&L here. So we've got a labor number, but that includes both contractors and FTEs. So you need to have call-out numbers in there as well. And again, it's another challenge that you're going to come across when building out.
So this is our agenda for today. We're going to talk about modeling the chart of accounts, transactions, budget states, relationships, talk about a few KPIs and some suggested financial visuals. The ones that are all but one will be right out of the box, and then hopefully we'll have time for Q&A. But I say I hopefully will have time because I have 25 tips regarding these topics of things that you need to focus on when you're working on your financial statements. So let's go ahead. I'm going to pull up. We're going to start with the chart of accounts and some of the points, because 25 tips is a lot to go through in a 45-minute session and allow time for Q&A. So we're going to have just some talking points on some of these. And the first one that I want to point out is the chart of accounts themselves. If you can, and I totally agree with Chris, actually Matthew Roche from Microsoft has his maxim, we call it, try to do your data modeling as far upstream as possible and downstream as necessary. So if you can make sure that when you're bringing in your chart of accounts that you're including categories, subcategories, which statement it belongs on, and even if you go to your most detailed financial statement and try to include the description for that particular line, you're going to find that will make building your financial statements a breeze, because then you'll have something that you could put a filter on, and that's something that is incredibly important. And I'll show you a little tip on that, or what it would kind of look like and how it could help you. So let me pull up. Let's see, come in here. This is just a little down and dirty one, but you can see I have some categories here in this particular visual, and this is a great way to break it down. This is a really cheat for sorting purposes here. But again, we're trying to come up with something very, very simple. I like to focus on the report consumer. And I honestly believe that financial statements should be shared throughout the company. So if you can make some of the visuals really simple and easy for end users to learn, it's going to be something that is super beneficial. I also believe that you probably should think about what is your non-financial account, your unit account. Let's say you're a manufacturer. Perhaps that would be the number of widgets that you produce. If you're a hotel, the number of hotel room nights that you sell. If you could find this unit of measure in your business, it may even be consulting hours or whatever it is, and then start looking at your statements in that particular way. So what is my income divided by the number of hotel rooms we rented? So I know how much money we made per hotel room we rented. That's going to really make it in bite-sized chunks that is understandable to the majority of your department.
So what we have here is an example report where we're viewing data for a particular month. Just to say, and it's only showing those months that we have data loaded in for. So actually, if we were loaded in a new month in that folder, we refresh our data model centrally, it will pick up August and September. So we can see here, we've got, say, June. So we're looking at the income statement for June. So at the top, we've got our key metrics, revenue, gross margin, net margin. And what's important here is that we've also got the context, because we can see what it was previous year. If we just said 8 million revenue or 8,000 revenue, is that good? Is that bad? Well, I don't know. It depends. What was it last year? What was it compared to budget? What was it? We need some context to evaluate numbers. So very important to use not just card visuals, but maybe a KPI card or with a card, multi-card or something to show some context as well. We then have our income statement. And this is in the format that we need for our general fixed format income statement. So we have revenue. We then have a breakdown for revenue, net sales, cost of sales, gross profit, which is then a calculation, and gross margin, which is the percentage. So we're combining in a single column here, which Chris rightfully highlighted is not particularly easy to do. We're mixing currency values and percentages in a single measure in the same column. And we have this for month to date. If we wanted to look for that month, quarter to date, we can just have a slice at the top here. Now it's showing quarter to date, and now it's showing year to date. So everything all kind of updates and reflects. Again, you'd have to do this all separate calculations in Excel. So much easier to have that logic centralized. And at the moment, we're looking at this for all organizational units. If we selected a specific one, it will then update, and now we can see our income statement is in euros. We've got the formatting we want in euros. We've got negative numbers in brackets, which is a way accountants like to show things. And we've also got some conditional formatting here. So we're highlighting unfavorable variances in red and favorable variances in green. And then let's just go back to all of these. We then have a waterfall chart in Power BI here as well. And waterfall charts are very useful. They're typically used more in balance sheet and cash flow. So you can say, well, what was my balance at this point? What was my balance at this point? What were the broken down by category, which units contributed most to that difference. But to be fair, you could use it for anything. So here we've got previous month. So here we're looking at May's profit versus June's profit. So in June, it was 1,349. And we can see there it's 1,349. And in May, it was 2 million. So it was higher. So which organizational units had a higher profit this month compared to last month, or which ones had a lower? So we can see why our variance is negative. And we can see Pacific actually had higher profit this month. USA had a slightly lower, and European had much lower. So they're the ones that really contribute.
So we have different components, and we have this idea of a unified planning model or a dynamic planning model that allows you to do HR planning, sales planning, financial reporting, any type of financial reporting that you absolutely need. Now, as I mentioned, one of the biggest problems that we hear about on a day-to-day basis is this idea of having an organization that has different disparate systems that they're trying to integrate with. Now, most of the time, people will export information into Excel, massage it within Excel, and then present reports based on that. Now, what the problem with that particular approach is that it's extremely hard to maintain, going back to the second slide that I was showing earlier with all the different Excel versions. And ultimately, you are missing a lot of functionality by being able to look at things from top down, bottom up, slice and dice in a lot of different ways. Now, Excel is a wonderful tool, and I don't think Excel is going to go away anytime soon, but it's not meant for data structure or data modeling. So with Acterys, what we have done is we have built a solution to help organizations aggregate all of their data and create that single source of truth, or that data warehouse that everyone operates under. We then take that information and we optimize it in what is known as a star schema data model with write-back capabilities, and I'll elaborate more into that a little bit later. And then the last component is taking that information that is now optimized in the most precise way and allow users to interact with that data, get insights out of that, and become a little bit more strategic and add value to the organization. Now, this diagram is one of my favorites. It allows you to kind of visualize the concept of what's happening behind the scenes and what we're going to be talking about mostly today. We start over on the left-hand side of your screen, which is what we call our pre-built connectors. Now, there's hundreds of them out of the box, and we'll talk about that a little bit more later. What we do is we actually integrate directly with these source systems, and we extract the data out into a central database or a data warehouse. And we normalize all of that data because, as you can imagine, different systems have different nomenclatures. In most cases, you don't want to be comparing apples to oranges. You want to be able to compare apples to apples, which will then provide those insights that I was referring to earlier. And then the last piece is, once you have all of this data centralized and consolidated, you have various reporting engines that can read that data and provide visualizations. So for today, we're going to talk about Power BI and Excel, but there are obviously others in the world that you can connect a data warehouse to get insights.
So this is this one, Zebra BI tables. You can import this visual, you can get it on the Microsoft App Source. The basic version of the visuals, of all the three visuals, are free, okay? And then for the full functionality, you need a license. So now I'll create, let me just add my accounts, so revenue, cost of goods sold, and so on. And then I have, so this is my group of accounts, and then, I get into details here. And now I'll just add a couple of measures. So this is these are my actuals, and let's compare this to previous year at once. As Rishi has already explained, you have seen these. These are the automatically calculated variances here. You can move the columns around in the tables and so on. But the important thing is here. So first of all, I'll switch off the automatic sorting. So as you see, Zebra BI offers sorting directly by just clicking on the column header here. But if you switch this to off, so there's no custom sort by a column, then the Zebra BI will just take your custom sort from your model, which is something that you need to have in your Power BI income statements, P&Ls, and so on. So now I have the right order of my accounts, and let me switch to a waterfall chart here. Okay. And now you see I have my revenue, service, and so on. This is a subtotal. So this is already my revenue here. And then I have some costs. All right. So costs of goods sold. Now these costs of goods sold in my model, they don't have the minus sign already in the numbers, which is fine, which is actually better because, you have 3 million costs. You don't have minus 3 million costs in a certain period, right? So this is actually better. However, of course, they need to be subtracted from your revenue. So that's why the Zebra BI offers the so-called custom calculations directly in the visual. So you can just invert all the elements. So the whole group of elements is inverted. So I get the minus here. And those 3.7 million is now subtracted here, and my gross margin will now be a result. So I'll just click here and mark this as a result, and I get 23 minus 7.5 is equals 15 million, 15.8 million. This is my gross margin, and then I have some operating expenses. I'll invert this, and I arrive at my next result, which is my operating income, and then This is my next result. Provision will need to invert the provisions, and this will be, so the net income will be my result here, 5.7 million, and I don't need the total here, so I'll just remove the grand total. And this is my income statement, visually presented, and so on.